Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.
Matt Justice here for Tackle Trading to bring you a special edition of the market recap video on Monday, August 24th. What do you say about today? I mean, absolutely just unreal day, trading day in the market so far. You know, it started really last night in the markets with the Chinese sell-off, where the Chinese markets really started getting hit 7, 8, 9% on the sell-off. That led into kind of the S&P 500 yesterday at the opening here. Let's kind of go check it out. Yesterday at the opening of the market, you kind of saw the market initially start to come down a little bit, down 1%, and then as it started getting a little bit later into tonight, a little bit later into the Chinese markets, as we started getting into the European market open as well, you started seeing even a greater sell-off here. And then the amazing thing, what happened was here at the initial opening of the U.S. equities markets. As you can see, right here is the opening price of the U.S. equities markets, and it just a dramatic sell-off all the way down to 1867, broke that 1900 barrier, and then all the way down. If you'll switch this from a 30-minute chart into a 15-minute chart, you can see the sell-off and the dramatic recovery even quicker. As you in 15 minutes of the market, it went from 1831 all the way back up to 1904. Just an absolute historic movement in the S&P 500. And you know, it's not that we don't see 5% down days. We actually do see 5% down days in the S&P 500, but this was the largest one-day intraday shift to the downside since 2011. And in August of 2011, you start seeing the markets kind of in the Dow Jones, 450 down one day. It would close at the bottom of the level. Then the next day, it would be 450 right back up. Just ridiculous volatility. But here, it was literally in that 15 minutes. Then all of a sudden, it just starts climbing up and up and up and up. And the thing about it is volume has been fairly high all day long in terms of the total amount of volume. And coming here to the daily chart, you'll see the price movement absolutely historic. Look at that candle there, all the way down, all the way back up. And you know, I've been getting asked the questions, is this a buying opportunity? I don't think it is. And the reason I don't think it is I don't think this is a buying or a selling opportunity at this point. And if anybody says that they know for certain that the market's going to do X, Y, Z, they're blowing smoke up you know what, or they're flat out lying, or they just don't know, because I think this movement is confusing a lot of people. It's confusing a lot of veteran traders, confusing Wall Street, confusing the hedge funds, because we really don't see these types of intraday movement where you basically recovered, you know, 6-7% down, then you recover 6% right back up. And so I'm looking at the market right here, and you know what, the buying price that we saw today, I'm certainly not buying it. You know, I'm certainly trading it intraday and so on and so forth, but I'm not buying the intraday rise right now, because I still see this as a slightly bearish market right now. This is the start of something bigger, and we do not know what that something bigger is. But when you look at the amount of manipulation that the Fed has done in the U.S. marketplaces over the last 4 or 5 years, they've broken an investor market. This is not an investor market right now. This is a trader's market. This is a hedge fund market. This is a high frequency traders market. And I feel bad for the ma and pa out there who is going to basically get off of work tonight and see kind of what's been happening over the last, you know, week to 2 weeks and get scared out of their mind. But I do believe the best thing to do for most people is to go cash while they wait to see this out. We're going to see a larger movement one way or the other soon enough, but at the same time, we need to make sure that we're prepared for that. And even right now, I mean, we're seeing ticks that are still fairly volatile in the market right now. You're looking at the dollar index. The dollar index plummeted to its lowest levels since this year, basically giving up all the gains in the dollar index that the dollar had for the better part of the entire year. You're looking at crude oil underneath that important $42 level, all the way down to $39, hit a low of $37.75 already. I see that continuing to plunge over the course of the next foreseeable future. Gold got beat up initially a little bit, recovered. Silver got beat up initially, recovered. Looking at the euro dollar here, real interesting, broke out of this, and we talked about last week in the Forex report how that's a buying opportunity, but now it's got up above that important level of resistance at 114, 115, and as long as it stays above 115, I do think that's a buying opportunity. Underneath 115, I'd probably shy away from anywhere 114 to 115, selling under 114, buying above 115 on the euro dollar. We'll talk more about that, but here's the biggest movement we saw in the VIX. I mean, absolutely, and I talked about how the VIX it can just explode in valuation over in a very short amount of time. Well, in just the last 3 trading days, the VIX has went from 16 all the way up to 53, back down to 30. That is historic movement in the VIX. I mean, even when you track it back to '07, when you track it back to 2011. The VIX spikes very quickly, and it certainly did that today. All in all, ladies and gentlemen, for me, myself, coming into here, looking at my long-term investments, looking at those covered calls, looking at those types of longer-term investments, I think this is a stay-away moment. I truly do. I think this is not a buy-the-dip moment. We still got a lot of room to get back up into positive territory for the year, and even if this is a buying moment, what are we going to go into 2050, 2025, 2050 before we start to see the dramatic sell-off as well? All indexes so far this year in the red. All indexes are in the correction territory, which is a 10% clip off the recent highs, and that 10% is the first number, and then you got to start talking. If it stays underneath 10%, you got to talk about 20% corrections, and then underneath 20% corrections, you got to talk about 2007, 8, 9. You got to talk about 2000, 2001, 2002 when you're talking about the larger shift in the bear market. But for right now, looking at this marketplace, a historic movement in the market this week, or not even this week, today, a utter broken market from an investor's market mentality. This is dominated by the traders, short-term traders. And if you're new to trading, if you're new to the market, if you're just learning how to start to understand price action and whatnot, this is a moment to virtual trade. This is a moment to practice in. This is not a moment to risk your money in. This marketplace could go anywhere from here. My guess is as good as your guess. Your guess is as good as Wall Street's guess. Nobody knows for certain. I do want to point out a couple different things. Very quickly. In aggressive sectors, it's time to get out of aggressive sectors. It's time to allocate into more of a safe haven position, more defensive position. And I've been talking about the protected put option and buying insurance for those 401ks, IRAs, long-term investors, retirement accounts. That is why you have to buy that insurance position when the market is sideways and not when it's already coming down. You really can't get in there doing that type of thing, because now the volatility is so high, it costs a lot more money to add the insurance position. So once again, to reiterate, I do not see this as a buying opportunity. I do not see the buy the dip mentality. I see this as a very high frequency trade. I see this as hedge funds. I see this as scalping. And if it's confusing in any capacity, it's time to go cash and wait it out. So what if you miss another 100 points to the upside? So what if you miss 100 points to the downside? It is a very difficult situation out there right now. Let's go cash in the retirement accounts if you can. Let's buy insurance if you can. And let's pick our spots. Let's pick our spots in stocks that are setting up great on the upside. Let's pick our spots in stocks that are setting up great on the downside. But for right now, on a day like today, let's wait it out. There's too much volatility out there, too much up and down out there. And just in the last 1 minute, we've seen the market go from 1% down to 1.6% down. That's what I'm talking about, the random shifts in price action right now. Let's be a little patient and let's wait that out. The last thing that I want to look at here is Apple. And the reason, Tim Cook today sent a letter to Jim Cramer at the very bottom of the marketplace, that Jim Cramer that we know, and as literally Apple's down 13%. 13%. And in the letter, he talked about how he didn't understand what all the concern about was China. Their valuations look good. It was an unprecedented way to manipulate your stock price. Good on Tim Cook. You're a great CEO for saving your stock price. You are a horrific investor for manipulating the price action. I just wanted to publicly say that because I cannot stand when company CEOs just come out there and try to manipulate their own stock price. And look for Apple. It's going to be interesting to see what Apple does over the course of the next foreseeable future. But I still have a bearish call on Apple as well, coming to the downside. This is Matt Justice for Tackle Trading, coming to you with a special edition of the market recap video, talking about an unprecedented day in the market. And for all of those who got frustrated this morning using your broker softwares, welcome to the party. That was for all of us.
Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.